Thank you for joining us on this Friday afternoon. So first up, let's start off with how the market has performed for the day. It has started losing momentum, slipping back each day. It hasn't really gone anywhere, but if we look at it on a weekly performance, it is ending off slightly weaker. Which have been the underperformers this week?
As you've seen, for the first, most companies are through with reporting the first half. Actually, the finance and investment sector, they're through with reporting the first half. So I guess the buzz is all gone now. Investors are now waiting to see if there are other developments that will come in. But again, the interesting thing that we notice that quite a couple of counters on the finance and investment segment are gearing up for rights issues. So really, I think that is what is making people take a step back.
Of course, Standard Chartered being one of them. And what has been the market perception of this? I know that UBA Kenya, of course, not listed in Kenya, is also wanting to raise some capital from UBA in Nigeria. But overall, what is the environment like right now to go to the market for funds?
Investors are bullish about banks. You've seen that most of them have declared their half year posting rather strong results, very, very strong results. Even though, as you can remember, in the first half, in the first quarter of the year, we had a bit of interest rate issues. But I think the banks seem to have ridden that. And mostly, if you ask me, the financial sector will be the driver of growth in the coming half.
Okay, interesting there, of course, and we've had some results out from all the key banks, first half results. We know that Equity, KCB and CFC Stanbic, in fact, is strong for the first half of the year. Which banks are you bullish on as we go into the second half?
I'm bullish about KCB. If you look at the cost of lending, it's rather low. So really going forward, I expect them to make a bit of profits. And remember again, going forward into the second half of the year, the winner will be the person who has the least cost of deposits. Because remember, so interest rates have been coming down, inflation figures coming down, MPC not yet, they've not yet sat down, but of course as they sit down, we'll expect an easing of the monetary policy. So really, the winner, the person will be the person who has the least cost of loans. My take here is KCB and Equity.
So KCB and Equity, with those interest rates on deposits being low right now. Let's talk about the shilling, because the central bank has been a little bit more aggressive this week in terms of intervening in the market. You've seen it come into the market every single day this week, in fact, in order to soak up a shilling liquidity. We've got the shilling sitting 1.4% stronger at this point in time. Just tell us about the market appetite for this and how this has had an effect overall on the type of volumes we've seen in the repo market.
Really, the CBK has been rather strong on that. I think I'd like to commend them because they've managed to keep it at low levels. If we have a weak shilling the way we've had in the past, then of course it will affect our top line. But going forward, I expect to see the CBK coming in more and more.
So, of course, this is going to continue, and you see the shilling stable. I mean, every time we come onto the desk here and every time we take a look at that shilling, it seems to be pivoting around 84. It really seems to be a level that is comfortable right now.
We should, in my opinion, we should be seeing around 86 there, because at some point the CBK will have to stop coming into the market.
But it has the reserves at this point in time to continue to come into the market to defend the currency?
Of course, yes. Of course, yes. In the short run, expected to continue coming. To continue coming back into the market, because that is one of the key pillars of that's actually one of their key aim. That is to keep the Kenyan shilling at the current rate.
Another sector that, of course, has been hotly talked about this week is the media sector. Nation Media Group signing up that agreement with the DTB, Diamond Trust Bank, in order to leverage off remittances into the region. What type of impact has that had on the stock price of Nation Media?
We've seen, I don't think the stock price hasn't changed much. You see, again, Nation Media is a counter really. It's not what I'd call a liquid counter. But again, if we look at the impact on the financial results, on their bottom line going forward, it will have an impact. It will have an impact on return on equity. Because remember, the money transfer business in Kenya is big. If you now put it into perspective worldwide, then I can imagine it's haywire.
So Crispus, I mean, as you say, not an Olympic stock, but if you can get your hand on this tightly held stock, would you? Yes, I would. Okay, so let's turn our attention to next week, because this week is pretty much done and dusted. Of course, we've seen, as I said earlier, the market rather losing a bit of momentum. Which stocks have you got your eye on for next week, and perhaps picking up at some attractive levels?
I would go for KPLC at the levels of 15 shillings. And also looking at the banking stocks, again, my favorite, I'd go for equity. Equity, strong growth, always gives good returns. But relatively expect the market to be...
Because, I mean, these are stocks that are always in demand. Would you be buying them at these levels or waiting for any pullback?
21. I would buy equity at 21 levels.
Okay. Thank you so much.
For Kenya Power, of course, there's an upside of around 4 to 5 shillings.
Okay, thank you so much. So there we go, two banking stocks and one energy stock, Kenya Power. Crispus, have a great weekend. Thank you so much for joining us today.